Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our interviews with successful real estate investors. Our guest today controls over $58 million of real estate. Before forming his company, he was a marketing executive for General Motors, Miller Coors, and SC Johnson. John Casmon is co-founder of Casmon Capital Group. John, welcome to Purchase to Profits. It's great to have you on the show.
Seth, thank you for having me on.
Yeah, you're very welcome. I'm really looking forward to this. So to kick things off, do you want to tell us what your real estate goals are right now?
Yes, buy more properties.
That's a good one.
Like most people right now, we are in acquisition mode, so we are looking to acquire more properties, and we would love to continue to build our portfolio with the goal of creating enough passive income through these assets to do whatever we want to do, right? So whether that is travel the world, if we want to take 6 months off, we can do that. But in the reality, because we work with other investors, we can never really pull out or unplug completely. But we do want to get to a point where we have more flexibility and control over our day-to-day.
Yeah. And what does that look like for you, just having that freedom? Is there like a dollar amount that you need to hit before you'll say, yeah, I finally made it? Or is it unit count?
I'm not sure if there's a dollar amount or unit count. I think a lot of times people put dollars to it. We certainly make enough money now to live with, within our means and have enough to take care of the things we want to take care of. But I think if you have an abundance mentality, there's a lot of things that you would like to do and a lot of causes that you want to help. So, I sit on a nonprofit for an organization, and certainly I'd love to be able to donate a larger amount of money to that, develop or, commit more of my time to that organization. So I think there's a lot of different things that we could do. So I don't want to say like, okay, if we were making $20,000 a month passively, that's my number, because if we did that, I'm sure I'd find other places where I'd want to invest some of that time or that money anyway. So I think it's just really a matter of continuing to invest, continuing to grow, and continuing to set higher expectations for myself and for the organization of what we can do.
Yeah, no, for sure. And I think that's a very fair answer because I've never met an investor who's successful so far who's just happy with what they're doing. Like everybody always wants to do something more and better.
Yeah, I was just talking to someone. They were telling me that I guess Susie Orman had retired for like a year or something like that, maybe 2 years. And she's certainly one of the most successful and famous financial planners and independent, saving your money. Just one of those people who preaches that. And she got bored, right? So she was retired and she was traveling the world, and she just got bored after a year or two and kind of went back to work and doing what she was doing. So that's what I say. Like I don't want to put a dollar amount because I think my impact, I hope, will be bigger than whatever money is left in my bank account when my time expires. I really want to make sure that we have a greater impact on this planet, and real estate is just a phenomenal way to do that. For me, it's not just about what we can make, but if you can teach people to build wealth, you can teach them to overcome anything.
Yeah, no, that's so true. So do you have any routines or rituals that you go through maybe daily or weekly that helps keep you focused?
Yeah, a couple things. So one, we try to wake up as early as we can, typically somewhere between 5 and 5:45. I try to beat my kids up, so it's really my goal. If I can beat my kids up and stay up for at least a solid hour, if not 90 minutes before they wake up, that's a really good way to start the day. During that time, I do a combination of things. It might be goal setting for the day or reviewing the goals that I put forth the night before. Might be a light workout, might be a little bit of reading. Right now, we're really focused on a couple different initiatives. So just thinking through, okay, what do I need to do for these various initiatives? But just really having that time by myself is one of the best things that I can do. And then every Sunday, I kind of think about the week coming up and what I'd like to achieve for the week. So that way, by the time Saturday rolls around, I can take a look, see where we're at, see if we hit everything, did we miss anything, and just understand what really needs to be prioritized throughout the week.
Yeah, for sure. And actually, you had mentioned before that you're in acquisition mode right now, like a lot of other people. When will you know when you're out of that acquisition phase?
Great question. I think once you have a large enough portfolio where you have other issues that are bigger, where you need to focus on that. Right now, if we had been investing for the last 25 years, for instance, we might be selectively, in disposition mode, right? We might be selling assets and waiting for a change in the market cycle to go back in acquisition. So I think it's important for us to kind of stay in acquisition mode. It just I think the nuance to that is that doesn't mean go out and buy anything or everything. That just means, hey, we're looking to grow our portfolio. We're looking to grow our investor base, and we're looking to find great deals to pair the two together. So I don't think that will ever change. It's kind of the crux of the company. I mean, we don't really have a business if we're not doing more deals. So I think we'll always stay in acquisition mode. I just think we also may slow down what we're doing. We may find other ways to drive efficiencies. We may look at vertically integrating certain aspects of our business model. So I think we'll always look at ways to retool and finesse. But deals are done by acquiring them. Until you buy a piece of property, you're not really a real estate investor.
Yeah, yeah, that's so true. And how, for your company, how do you make sure now we're at in the market cycle, you're still acquiring? How does that change in a market like today's market versus let's say 5 years ago?
Yeah, great question. One of the things we're doing right now is we're really focusing on cash flow. Now, we always focus on cash flow, but I think in today's market, it's even more critical. So I'm actually more optimistic about some of the Midwest markets than some of my peers. But if you're looking at today's market, you want to make sure you're buying for cash flow. The exit cap rate could be all over the place. Who knows what that's going to be 5 years from now? But
Yeah,
what you can more accurately predict is how much cash flow can you get today when you purchase the asset? What's your value add strategy? How are you creating value? And then how do you make sure your financing is in place so that if the cycle does start to take a hit, you can weather through that storm and you're not trying to refinance when maybe interest rates have either ballooned up, which typically should be a sign that the market's better, or they've gone down, which means that maybe the overall value and the cap rate has expanded. So I mean, you got a couple of different levers there, but nonetheless, you want to make sure that you're putting yourself in a position to be successful no matter what happens with the market. And I think that starts with cash flow.
yeah, no, 100%. So, of all the deals you've done so far, is there one that stands out as a keystone deal?
You know, um, there are a couple. I would say the my first commercial deal stands out. It's an 8 unit deal, an average deal, did okay. But it stood out because that was the first commercial deal, right? And I did it by myself. We did not take on investors in that. And I specifically did that because I wanted to have that experience before really starting to partner with other investors. I would say the other one would be the first really large scale apartment deal we did, 192 units, where we had some partners who kind of led that operations. We kind of came in and partnered from a marketing standpoint, really tapping into my background, as well as hoping to bring some of our investors into that deal. So just going from, small residential size, multifamily to first commercial deal, and then really a large apartment community. Those are kind of two deals that certainly led us to much bigger projects going forward.
Yeah. And so for that first, multifamily, that 8 unit deal, you said you did it all on your own. Did you have any challenges because you didn't have experience in that commercial space getting financing or any of that stuff?
No, not really. I mean, we certainly the terms are certainly different, but we had experience with multifamily. It was just smaller, right? So we
Yeah.
had great experience there. We had all the capital ourselves to bring the money down. We had great credit. So I mean, and I said we being my wife and I. So we had great credit. So we didn't really have any of those kind of issues. What we did find was, the terms that we were getting weren't as advantageous. You go from 2 to 4 units where you can get 30-year terms, right? 30-year fixed and fixed terms, to the commercial space where now you're looking at, 525s with balloons, 525 meaning a 5-year term amortized over 25 years with a balloon payment due at the end of that 5-year period, right?
Yeah.
So not really the same advantageous terms. You're paying a little bit more money because the amortization schedule is more compressed and the interest rates are a little bit higher. So that wasn't the same. So we did spend a lot of time shopping to see if we could find better terms. We finally found a regional bank that was able to do 530. So we got 5-year terms amortized over 30. So that was helpful and helped us just kind of spread some of the payments out and allowed us to try to have better cash flow on the deal. So I think that was the most challenging thing, but
Yeah.
certainly um, having some multifamily experience really helped. And I think that the bank, because it was a smaller local bank, they were more flexible. But what they did do that was different is they required us to have property management. So I would say for any of your listeners, if you're looking to start off with your first commercial deal and you're going to self-manage, the bank may not be happy with that. So for us, it was kind of one of the prerequisites was, hey, since this is your first commercial deal, we would like for you to have commercial or property management, which we had planned on doing anyway, just because I wanted the experience of managing that to know what I didn't know and just going through all those different things. But that was one of the requirements they have. So some of the rules or some of those requirements may be a little bit different than what you'll see in residential.
Yeah. And you had mentioned you targeted that deal to give you a track record so you can bump up to the larger deals.
Yeah.
What would you suggest that for somebody looking to get into larger syndications to do those small deals first?
It's not a prerequisite.
Yeah.
But for me, I like to be very confident in what I'm doing. So I will go much slower because I like to really learn and understand and know what I'm doing thoroughly, and at least have the resources around me for any remaining pieces that I might need assistance with. So that was kind of my thinking when I started out was, hey, let's get the experience. I think that one, it'll help me be more confident. And then two, if I were an investor on the other side of that table, when you ask the question, what experience do you have? Okay, well, yes, it's not 200 units, but it's something. Not to mention that 8-unit building, it wasn't like it was a $100,000 value. I mean, I was more than $500,000 of value, and at that time, I had around a $1.3 million portfolio and got it just under $2 million. So it wasn't like I was starting from scratch. So I do think that it helps to have some experience, especially with multifamily, whether that is through 2 to 4 units first or small commercial buildings. I think you could certainly slowly build it up over time, but it kind of depends on what your expectations are. If your expectation is to come out of the gate, buy a 200-unit building and raise $4 million or $5 million on your first deal by yourself, good luck.
Yeah.
And it's not to say you can't, but again, think about the other side. If you don't have any multifamily experience, you're going to come out of the gate and ask people to invest $5 million with you, and you have no experience. That doesn't seem like a very compelling pitch to me, right?
Yeah.
So I think the better approach is, hey, either A, build slowly, start with some smaller properties, get some small commercial properties and gain that experience. Or what a lot of people don't tell you, another strategy is to find someone who has that experience. You can either have them as a mentor, you can have them as a coach, or you can have them as a partner. See where you can add value to them. See if you can be a part of their general partnership team or somehow get experience from working with them. So now when you go out to raise for your own deals, you have much more experience, you have much more knowledge, and it's a stronger conversation that you're saying. And not to mention you're more resourceful because you have these individuals you can call if you ever need help with anything you're working on.
Yeah. And that's what you did with the 192 unit. You said you actually partnered with somebody on the general partner side.
Yeah, absolutely. That's exactly what we did, and that was one where it was a guy that I knew. We had been talking for a while, and it was one of those things where we were looking for our own deals. We did not set out to partner, but we were open-minded. And ultimately, because I was struggling to find a deal at that time, I reached out and said, well, listen, if you find something that works for you and you need some assistance, I'd be happy to help you. And I think that's a great tip for your listeners is you have to be open-minded. And sometimes you got to take that ego and put on the shelf and just say, listen, how can I add value to someone else? Same thing with your investors, right? So for me, it's not, hey, we're just raising capital. It's how do I add value to you? There's people who will say, hey, can I invest 50K in your next deal? And I'm like, well, sure, but how does that add value to you? Like, what are you looking to get? Is it just a return? Or are you looking to gain experience and understanding how syndications work, right? So it's really understanding that value proposition. And for me, it was very simple. I had investors they needed to park money desperately. So I needed to find a deal one way or the other where we could help them park their money, or they were going to go find something else to do with their money. So I think for us, that kind of forced me to open up the thinking. And because I had these friends who I built relationships with, individuals who I trusted and respected and kind of knew what their approach was, it made it an easy opportunity to come in and decide to partner together.
Yeah. And after you had built that track record with the 8-unit property and then partnering with that 192, how has that really allowed you to springboard forward with your business?
I think one, it allows us to move more confidently in everything that we do, right? So the more deals you do, the more comfortable you get. And comfort meaning that you're analyzing a lot of deals, you're putting in offers, you're talking to investors. So you can move in a way where, as a young entrepreneur, you're not as intimidated by large deals. You're not intimidated by 8-figure deals that are put in front of you. So I think that's one of the biggest things, is just really opening it up. We're in the middle of, or actually close, we're at the tail end of a deal right now that we're getting ready to close out. We have, an offer I'm getting out today on a deal where I've been talking to the broker for the last couple of weeks. So we'll see if we can get that deal. Hopefully we can. But you're just able to move with much more confidence. And I think that it also helps you drive more recognition for the folks around you. You build relationships, people reach out to you. So you're able just to continue to grow your business in a way where, when you are starting out, you don't have, the same kind of resources. You just don't have the recognition. People don't really know who you are. You don't know 100 other syndicators, right? I mean, I literally was sitting there thinking, like, I probably know 100 other syndicators, literally 100.
Yeah.
And I'm only guessing that based on like my Facebook and LinkedIn connections, but like, you know, I have 100 other syndicators I can call at any given moment in time and kick a deal and say, hey, tell me your thoughts, right?
Yeah.
So, I mean, those are things where, when you're starting out, if you don't have those resources, it's going to be a little bit more difficult and challenging. So it's always good to just build up the network and have all the resources available to you. So again, you have the confidence to move forward and move with optimism and do the deals that make sense for you.
Yeah. And right now with your business, you've got the track record, you've got the experience, you have the network. What would you say is the biggest challenge for you right now with growing your business?
Yeah, I think like many other operators are just finding great deals.
Yeah.
We see good deals, average deals, but for us to do great deals and be conservative in all of our underwriting, it takes a little bit more challenge. So we're kissing a little bit more frogs and having to work a little bit harder to get those deals. But nonetheless, that's been the biggest challenge, and it's a challenge. It's not an obstacle. It's not something that stops you. You just have to work a little bit harder. So we're getting ready to launch an off-market campaign, talking to some owners just to see if that helps. We've talked to brokers, and I've personally reached out to brokers and say, listen, I'll continue to look at the deals that you send me, but why don't we try a different approach? I'm going to send you some properties that I'm looking at. If you know the owner, let me know what your thoughts are. Let me know if you've already approached them on selling, and maybe you and I can work something out where, if you can reach out to them, let them know you have someone interested in buying their property, you can do some of the back channel stuff. And, I will obviously compensate you. It's going to be less than your, 5 or 6% commission, whatever it is.
Yeah.
But I'll be willing to compensate you for helping me track down some off market deals.
Yeah, no, that's a really good strategy, and it goes again with that team approach, right? You're not pushing people away. You're bringing people into your operation to add value.
Absolutely. And think
Yeah,
about the broker from that standpoint, right? So what I'm
yeah,
basically telling him is, look, you don't have, I'm gonna find the properties. I just need you to help with the conversations, and you're gonna get a commission for a property that you otherwise would not have had, right? Otherwise, you're gonna have to reach out, call all these people, see who's interested in selling. Okay, you got them, do your analysis, put together the marketing package, blast it out to the thousands of investors in your database, do all these showings, answer a million questions, and hopefully get an offer where you can actually hit what you thought you could do, and then try to close. And keep in mind, you don't get paid until you close. So
yeah,
you did all that work as a broker, and you're not getting a check until, we sit down at the closing table. So I think, if you can find a way to add value to everyone, it makes it a little bit easier for you to do your job and grow your business and work with what you're trying to accomplish.
yeah. And how has getting involved in real estate on the syndication side changed your life so far?
I think that it has allowed us to create the lifestyle that we're looking for. And it's not 100% there, but um, you know, to pretty much be location independent for the most part, to be able to build wealth in a way where, this is a lifelong skill. You're not really dependent on an employer. You are really focused on, what you're building over the long haul. So I think just opening up the possibilities and, thinking with an abundance mentality and how can you help more people? How can you be of value for other people, whether those are investors, whether those are owners, whether those are brokers, whether those are other, syndicators or other operators starting out, there's a lot of value that can be provided. So I think for me, it's just really thinking of myself and the company and my partners in a different way, where we recognize the service that we're providing and thinking from more of a macro level of the impact that we can have. And like I mentioned at the beginning of our conversation, there are other things that I'm very passionate about that I'd love to spend more of my time and energy doing. I love real estate, so I will absolutely do this until I die, probably. But there are also other passions like the nonprofits that I'm a part of. I have 2 young kids, so being involved in their growth and development and helping with homework and all those little things, right? So just making sure that, again, we're spending the time that we can doing what we want to do as opposed to working 60, 80-hour work weeks just to, come home and not really get the benefits of all that work.
Yeah, no, for sure. So, John, where can people find you if they're looking for some more information?
Yeah, you can go to our website, casmoncapital.com. That's a great place to start. My email is john@casmoncapital.com. I am on, Facebook and Instagram as well at @jcasmon. So you can find me at any one of those platforms. And then they can also check out the podcast, Target Market Insights. That's a great place to check out some great information if you want to hear other great guests and just all the great tips that, that we're uncovering every week. That's a great place to go. And, they should also keep listening to your podcast, Seth, because it's just a great way to gain knowledge and to connect with people and, stay on top of what's happening, what's current. You've got to listen to podcasts, read books, and network your butt off if you're going to kind of take yourself out of where you're at today and get to the place where you really want to be.
Yeah, absolutely. Well, John, just want to say thanks so much for taking the time today. And I appreciate you sharing your real estate success with us.
No, thank you, Seth.
Yeah. And to our viewers, I wish you well on your journey from purchase to profits. See you next time.